Alright, welcome to episode 2. So in this episode we're basically going to be going over what is a candlestick. So you can see on my chart here, all of these are candlesticks, and we're going to basically be going through what a candlestick is, because I'm sure a lot of you are completely new to trading. That's what this whole bootcamp is about. So you guys will just be seeing lines on a screen and not actually knowing what any of this mess is. So we're going to go through that now. I do have an image which we can run through here. So before we start, I'm just going to tell you to ignore the upper shadow and lower shadow. I don't use that terminology at all, but this was the best diagram I could find. So you have a bullish and a bearish candle. So a bullish is an upwards candle. When you first open TradingView, that will be green. However, you'll see on my charts I changed it to blue just because, for me personally, green, in your head, in your receptors, which your brain picks up, green means good and red means bad. So sometimes when you have that on your chart, and let's say you're looking for buys, all you want to see is green, because you see green as a go, you see green as success, and you see red as bad. So if you're watching a trade go up and you're seeing green candles print, that's good. Your psychology, without you even realizing, you're going to be really happy. You know, every time you see a green candle, you're going to think, yes, we're winning. And then when you see a red candle, it can affect your psychology massively without you even realizing as well. So for me, I went for completely neutral colors. I went for blue and black, and that is changeable in the settings on TradingView. But if we get back to this diagram, so yours will be green and red. So a bullish candle is a candle that finishes upwards, okay? And a bearish candle is a candle that closes in a downwards position. So on a bullish candle, price will start at the bottom and end higher than where the start position was. That is how a bullish candle works, okay? And on a bearish candle, price will start at the top and end at the lower end, below where it started, okay? So that is how to determine a bullish and a bearish candle. But your chart will automatically color those. When you have a bullish candle close, it will automatically color whatever color you want it. For example, mine's blue, as I just went through. So you don't really need to worry too much about that. You know what is bullish and what is bearish just from the colors. So with a bullish candle, so with these wicks, so these wicks in the market is basically, so let's say this candle represents 5 minutes worth of price action, okay? So you can see here, price opened here, came down a little bit, wicked down here, and then came back up, went really high, extended quite a lot, and then after the 5 minutes, this is where price ended. So the body of the candle is where price has gone and finished in that space of time. So when you're on time frames on TradingView, I'll go back to TradingView here for an example. So you can see at the top, let me move my, I can't actually move that. Here we go. So you can change your time for, we could put 1 hour here, and it will give us 1 hour candles. Not that it has 1 hour. There we go, 1 hour candle. So now every candle here, which you see on your screen, represents 1 hour worth of price action. So if we look at one of these candles here, one of these recent ones, you can see price started here in this hour. Price has come all the way down and then gone all the way back up and closed just here. And it's also gone a bit higher, but within that hour, it has moved all the way down here and then come back and closed in this tiny little, and this is actually a hammer candle, but we won't get into the candle formations just yet. And then on this bearish candle, which is still forming, you can see price is currently, we've got 32 minutes left on this hour candle. So price has gone all the way up and it is now coming all the way back down. You can see that it's created a small wick down here from where price has traveled to during this 30 minutes. And this candle, you know, it could finish anywhere. But these wicks show signs of rejection. So on this hourly candle, you can see price has come all the way down here and then gone all the way back up. So that is showing you that price is rejecting this area, okay? Especially when the rejection at the top is a lot less and a lot more at the bottom, it's showing price is rejecting this overall area. So that can be a sign that price is seeking opposing liquidity. But we'll get into that again at a later stage. But moving on to this again. So bearish candles are the exact same. You can see where price starts up here and it has closed. Let's say again 5-minute candle, this is representing the body of the candle has finished here. So in that 5 minutes we have traveled up, we've come back down to where we were, we have traveled all the way back down. We've traveled all the way back down, and then at the end of that 5 minutes we have closed here. Okay, so these lines are called wicks. That is basically where price has traveled to during that 5-minute candle, for example, but has not closed and has rejected that area. So we look at wicks as a sign of rejection, because if you look at it, price has come all the way down here and then gone all the way back up. So it is rejecting this area that is tapped into, whatever that area may be. So yeah, that is what a candlestick is. You know, you have a bullish candle with the body is essentially where the candle closes within the time frame of that candle. It's very, very simple. So yeah, I think this diagram we're done with now. We'll go into some live examples now. So yeah, I mean, all of these are candlesticks. You can see here, every single move in the opposing direction has a wick pretty much. So you can see price has come all the way down here from this candle, and we have rejected this overall area because we have come all the way down here and then traveled all the way back up within the hour and closed up here. And again, on this bullish candle, we've come down a little bit and then rejected this overall area and closed as a bullish candle, again rejecting this area. We have the same here. So this is just showing you that wicks on these candlesticks are basically giving you signs of rejection in the market, okay? And obviously further down the line in later episodes, I'll show you how to use these wicks as potential indicators on where price may be seeking. So again here, we can see price has reached its limit. We have, I mean, we'll talk about liquidity in another one, so we won't get too deep into that again. But again, we've got a bullish candle, so that means that price started down here and ended up here. And we have wicked extensively up here, showing signs of good rejection once again. And then body candle close here within the hour. So again, that is showing good rejection, and you can see after that rejection, the market moves down. And then again here, we have 3 candle closures with massive, massive wicks, which is again showing signs of rejection, and you can see price has moved up from there. So these wicks are very, very good to see where price may be rejecting from, and it can give you massive signals in the market on where price may be seeking, which ultimately, once you know where price is moving, you can just use your entry model, which obviously I will be teaching you mine, but whatever entry model you may have, you can use that to find entries. So we'll go down to another time frame. We'll go to the 1 minute time frame. No, that is, yeah, 1 minute. So now every single candle is 1 minute worth of price action. So let's have a look at this candle. We've just, you can see, so this is live market on Euro USD. We've got 30 seconds left. So this timer over here shows you how long each candle has left. So we can see that we are pushing up really, really nicely here. We've wicked slightly to the downside, and we are pushing really, really far up. And again, at the bottom of this move, we've had 2 wicks to the downside. And another way of seeing where price may be rejecting from is when these wicks are larger than the top half wicks, okay? So we've come down here, we've wicked larger at the bottom than the top, so we are showing good signs of rejection from there. Again, we've wicked larger at the bottom than the top, so we are rejecting from there, okay? And once again, so this candle which we have just printed within that minute, we wicked down, we came up, and we wicked slightly up here as well, but ultimately that candle finished in this candle body closure, okay? Let's watch one more candle and just see how the market moves. So I use this 1 minute time frame to find my entries, so it is a good time frame to be using, and it prints candles obviously every minute, which is very frequently. So let's analyze how this candle may be moving here. So we are currently bullish as price is above where this candle opened. We have traded down slightly and wicked, which is again showing good signs of rejection. We've got 8 seconds left on this candle. Now we've come down and turned into a bearish candle. So this is now a bearish candle. And we finished in a bearish state. So you can see we traveled all the way up, and we watched that together, travel all the way up. We then came down and the candle closure ended here, which is below where it opened, hence why we have printed a bearish candle, which is black in my case. Obviously you guys can choose what chart colors you want, but I would recommend highly black and blue, because they are neutral colors, and you would be surprised how much green and red can actually affect your psychology when you're watching the charts. So I think that is honestly everything for candlesticks. It is very, very self-explanatory. It's just a bullish candle and a bearish candle, and then we have wicks, which obviously show signs of rejection. So you can see here we wicked up largely up here, and now it looks like we are rejecting from there. Okay, so these aren't just coincidences. You know, these are signs in the market that are telling you every single second. You know, you do have 1 second time frames, which I don't personally use, but people out there do use. And these wicks are showing signs of rejection. Again, look, we can see up here massive wicks, which again show signs of rejection, and the market tends to move in the opposite direction to those wicks, as we are seeing in the live market now. So that is candlesticks. If any of you guys have any questions in the comment section, please ask away. Hopefully I haven't missed anything. I don't think I do. It's quite self-explanatory, as I've said. But, I mean, you can see this is a really, really great example it's given us. We had a very, very large wick on 3 candles in a row, and you can see how prices reacted from that. And this is a very, very bearish candlestick. So another thing to point out actually is how bullish a candlestick or bearish candlestick is. You can see this is heavy movement in the market, showing good bullish intent. Okay. And again here, when this candle was all the way down here as a closure, you can see here this candle is a very strong bearish candle. Okay. But that is simply it. You know, you've got wicks, which are these points where the market travels into but closes below or above. We've got the body where the candle is starting and closing. That is the body. And obviously we've got bullish and bearish candlesticks depending on whether price closes above or below the entry or the starting position of that candlestick. So that is all for episode 2, guys. Hopefully you've enjoyed. If you have, make sure to hit that like button and comment any ideas or any questions you have in the comment section. I'm here to help, and hopefully this bootcamp clarifies a lot of things for you guys and helps you get on your way.